This is Bert Dohmen with Chart Guru, November 9th. Let's look at two charts today. The first one is the S&P 500 index, and you can see here the up move from the beginning of the year. It's been a great move, one of the best years in a long time, but it's getting very overextended. Let's take a look at some of the signals. This is here the May top, followed by a 1,000-point decline in the Dow Jones. This was significant if you were long, especially as a short-term trader. And then we had a new rally here. This is 1 month in amplitude, this one line here. The market started going down. I had one more pop to the upside. This was basically 2 days, and that was all. And then we had another correction in the market. The market picked itself up and started moving up again, hitting this trend line, and that turned the market back again. Here is the October 9th, where we set in our trading services close out short positions. It was the exact day of the low of that one, and then the S&P 500 made a new high. And in fact, what was significant is that it broke through this trend line connecting the tops, broke through that. That's usually very, very good behavior. It bounced back here, found support. And here, this is the Thursday decline. The Thursday decline was actually quite significant, especially in some of the small caps and the aggressive stocks. We saw massive dumping on high volume of stocks. This here is Friday, and as you can see, it could not get to the high of Thursday, which therefore makes this an inside day. Inside days usually tell you that there is lack of strength, and looking at the underlying numbers such as the stocks hitting new highs, etc. This was a weak rally on Friday, although in Dow Jones Industrials measure, it actually made a new record high on that day. We put a question mark here because right now it's still unknown whether the market will continue upward now or if it's going to have another correction. But the fact that it held here above this line is positive, and the market actually could continue on its upward path. This line here is also 1 month, just like this one here was 1 month in length. Here you can see some of the technical signals using a special stochastic that we like to use, and these arrows tell you when it's crossed over. That was about this time. A very nice sell signal, very nice buy signal here when they cross over again, and that was about right in here. And here's another sell, here's another buy. Very nice signals. Sometimes they catch the exact turn, and sometimes they're within a couple of days of the turn. And if you just follow these signals here, don't look at anything more, you can do very nicely. This here now is where at the current time. It did cross over here, but now it looks like it wants to start crossing over again to the upside, which is definitely possible. Here it did that for a couple of weeks, I think, in July and August, before you had another correction in the market. So we could see that kind of thing again, and that's something to watch out for if you are a trader. Now let's look at the IWM, which is the ETF for the Russell 2000 small cap stocks. And here we see the IWM, which is small cap Russell 2000. And here you can see the nice up move. Actually, it's been much stronger than the S&P 500. The difference in performance right here at this top, and the S&P 500 is at an almost record, which is normally seen only at important market tops. That's something to consider. Here's the May top in this index, and you can see that the decline from May to June was much less than on the S&P 500. Then it made a new high, another correction, but this pullback here actually stopped right at this the peak lines. If we draw a line in here, and it stopped right there, which was typical bull market behavior, and then it rose again to new high. Had a pullback here, again right to the top of this one here, went up again, tried, and then went down lower. This is the kind of thing that we could see right now in the S&P 500 index, but we don't know yet. Here made a new all-time high, and it actually topped out about 10 days earlier than the S&P 500. That was a warning that the general market might weaken, but we only have one data point so far of a rebound, and that is this year on Friday. But note here that Friday's up move did not make up for the entire decline of the prior day. It did not take out the high of Thursday, and it did not take out the low, which makes it an inside day. And inside days are not particularly bullish. It also stopped here at this exponential 50-day moving average, which is an important support area. So it found support right there. Also, we have here the channels, and it found support there as well. So there were many reasons for it to find support. We'll have to see early next week if it now can go up and get through the top line here. That's the first resistance, the first barrier, and if it can actually make a new high, or if it will just go to the old high right in here and then start downward for a more meaningful pullback. That's something remains to be seen. Here we can see how the stochastic would have performed. Nice sell signal here when they crossed over, nice buy signal here, nice sell signal, etc. These are beautiful signals. If you don't want to follow anything else, just look at these crossovers. They'll tell you what to do. Here's one fake out, crossed over, gave a sell signal for about a week, and then crossed over again. So right now it's actually on a sell signal here, the small cap stocks, and we'll have to see now. We would bet that this line is going to start going up here a little bit, but it might just chop around in this area. If you really want to know more about what the markets are saying now, and also the global markets and important areas such as gold, the emerging markets, and bonds, come to our webinar, which we're having on the 19th of November. You can sign up on the link, which we are posting on the website, and here at the bottom of the commentary on this chart. Come visit this webinar. It's 60 minutes. This is going to be extremely valuable. This is Bert Dohmen signing off.